Welcome, Saeed. How are you?
I'm not too bad, thanks. How are you?
I'm so glad that I woke up in time to interview you because the response on Twitter to you doing an interview here was uh, outstanding. People saying, boy, I can't be there. I hope it's recorded so I can hear it later. So it's really special to wrap up the Christmas week with you. Thank you for being here and your patience for not knowing whether or not I would be here. So great to have you in our community, Saeed. Can you hear me?
Thank you. Yep. Sorry, I was sorting my mic out so it's clear. Yep.
Okay. All right. So, Saeed, we know that you're an accomplished trader. I caught that from all the people. You know, someone even said you're a legend, and I can relate because I used to be a legend in my own mind. So when other people say it, it means something. So why don't you tell us a little bit about how you got started, point A little bit about your journey, how you got involved in trading in the business, and if you had any mentors or books or what influenced you early on to get to where you are now.
Okay, so I started while I was at university. So I studied mathematics at university, and a friend of mine who was trading, I sort of overlooked his laptop while he was working. And I just asked him about it. You know, what's this you're doing? And he's trading stocks and stuff, and he wouldn't really let on. And then I got some believe it or not, some random spam email about trading, and led to like YouTube videos and stuff. So I thought, okay, this sparks my interest. So I started probably the normal, typical way of baby whips. That's where everybody normally gets recommended to.
Okay.
And then from there, I just came across a few mentors. My mentors have been Tom Dante, you probably know him, ICT, Chris Lowry, and WMD. Those have been my four main mentors.
Some good ones in there. Good ones in there.
Yeah, and then from there, I've just taken what works for me and left what doesn't work for me. And experience has been the biggest learner from there.
It is. You can't learn it, can you? It only happens with the passing of time. So that's a great segue. I ask people this, how many years did it take you to make a breakthrough to where you became consistent and really did have the ability to make money as a trader instead of, you know, up 20%, down 20%, you know, just trying to hold your own, to being consistently and being able to make a living trading? How many years did it take you?
Yes, typical question people ask, how long do you take? I think you reach a stage where you become profitable, but then you reach a stage where you're consistently profitable, where you can be profitable with 10% equity fluctuations, but still make money overall. But deep down, when I was at that stage, I wasn't really comfortable. I wouldn't say, oh, I'm a professional trader, but it comes to a point where your equity becomes smooth. And that probably took me about 1.5 years, I'd say.
Well, that's shorter than most answers. So, you know, the average answer I get is about 4 years. It's almost like getting a university degree.
No, I think with me, it was I'm a bit of it was obsession for me. So I probably spent about 20 hours a day working. So compared to normal people spending 3-4 hours a day, I just fast tracked it like that.
Okay, so I could see, besides having some lines, I'm not sure what the lines represent.
Oh, these are just random charts I've got up here. Is there anything particular you'd like me to go through, or you got questions about?
No, I was interested in, you know, first of all, I could tell you trade pretty naked. It looks like maybe you have some pivots there right now, and you use no indicators, so you trade naked. I hope you keep the blinds closed.
These are just charts to show you guys. Really a lot of indicators.
Trader. So tell us what the main things are that you look for in trades, and then we'll go over a few instruments. Technically, what's most important to you as a technical trader?
All right. So for me, right, I always start off with the bigger picture. What is going on? The bigger picture.
Monthly charts?
I actually start off with the yearly. Even if I'm scalping or day trading, I start off with the yearly.
Okay.
So each bar shows a yearly, and I'll just see where are we within the yearly candle. Where are we within that part of the year, the quarterly, the 6 month, the monthly. I always start off with those charts. So if we're above the yearly candle for the year, we're bullish. Then I'll break it down into something like the 6 month. And my trading view is frozen right now.
Okay, so that yearly candle you have in euro, we're trading above that blue line, so it's still bullish. If you go back to that chart, where would and I saw that bullish target, if it remains 127 was possible, 27 and a half.
Yeah.
Where's that blue line, I assume, which is a high of the previous month's candle, we start trading there.
This is last year's high.
Last year's high, which is what? 115, 16?
1.1616, yeah, what, 1.16.
Okay, so if euro started trading back under that level, would that negate the bullish case?
So when we're dealing with a 12-month chart, I'll give you a bit of time. So yeah, if we were to say close below this, right, then that would be like a warning sign for me, like, start considering a reversal. So that's when I start going lower down to just get a zoomed in picture. So I'll go to a 6 month then. And how does a 6 month look like? So I know it's the end of the year, so it's kind of difficult to tell, because towards the end of a candle, we always get that wick, don't we? So I'm seeing all these as pullbacks. So I'll just zoom into the 3 month. Now the 3 month, you can tell it's just retested previous year's high. So at one point, this was full on bearish, and a lot of people were calling trend reversals. But then if you go to like the monthly, then after that, you can see what's happened. So we've broken out of last year's high, pushed rip up, and it's coming down. Everybody's calling it bearish, but keep in mind where we are in the bigger picture of things. And you can see the difference between a retracement candles and the impulse move, or the flow we're in, the higher time frame flow. So look at the bodies of these 2 candles or 3 candles, small, 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 typical behavior of retracements or corrections. But then look at this, as soon as it hits the support level, boom, big explosive monthly candle. So that is alone is a bullish sign for me alone. So
that's a pearl. Okay, so you're not a little bit about Elliott, because I heard you say, did you use the word impulsive or corrective?
Oh, I don't know, but I've never studied Elliott theory, but these are just vocab in my dictionary anyway.
Okay, all right. So the bigger the body, the more important, significant the candle is.
Yeah, I mean, I look at the bodies in the sense, for example, here, right? Let's look at this. I ignore the wicks and look at the bodies. Look at how small these bodies are. Small, 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 small. Now, consolidations lead to expansions. Now, if these are small body candles going into a resistance level, and say you were bearish at the time, you can plan for a big position play, because it's not going to last like this forever. So that's how I start using it. And then I start using the monthly opens, the quarterly opens, the yearly opens, just to get my bull bear line. So for example, when this candle was starting, I went long here actually, and I think I posted this on Twitter anyway. When we were below the monthly open, right, and I was expecting bullish price action. The way I look at it is, anything below the monthly open, I'm assuming that's going to be the wick of the candle. So I project, or I think about how I'm expecting the month to end. And then when price lines up with a lower time frame, and I'm in at the wick of the candle, this allows me to position for a swing trade. So I'm expecting huge expansion. And normally, once we get above the open of the candle, that's when we get the expansion phase of the candle. And then I keep in mind, what time of month are we in? So usually the first week of the month, we're bound to get consolidation moves, because NFP week. Then once we've passed that, then most likely we're going to be in the body of the candle, the body phase of the candle. And that's when I start expecting trend moves to happen. Whereas before that, I'm expecting range moves.
That's interesting too. So do you think the NFP plays a role in it, in currency trading, that people don't want to make big commitments in front of the NFP? So the week after decisions are made and the market begins to expand?
The way I look at it, I mean, I think there's a lot of hype over NFP as well. I mean, when I first started to learn to trade, NFP moves used to be huge. And then past year or two, NFP just whipsaws back and forward and then just drifts normal. So I think the behavior has changed of that as well.
It's losing its impact.
Yeah. So I mean, I don't really pay too much attention to it. The reason why I
Okay.
just wait for NFP to finish is just get the chop out the way with. Once the chop is out the way, then I can position myself. So if I'm just used to MT4, so I'm going to show you an example of a trade I've taken previously, and then we can just build on that. So
Okay.
if I do this, so this was the whole month of November. This so at this point, everybody's calling a head and shoulders play, right? Everybody's
Right.
calling it head and
We
shoulders play.
remember
Yeah.
that. Yeah.
Now, keep in mind what I've just said. This is what the previous year's high. So I think sometimes people get caught up in what's happening right now, but they've forgotten what is the key higher time frame plays happening. This is why I'm always focusing on what the quarterly is saying, what is the
Well,
6 month saying, because the higher the time frame, that takes more priority for me over the lower time frame. Now, don't get me
okay.
wrong, these
Okay.
are
So after
obviously,
the breakdown, the level that it went to was more significant than what people were seeing as a head and shoulders because it went
yeah,
to one of your quarterly or
yeah.
yearly pivots, right?
So yeah, exactly. So that
Okay.
alone isn't enough for me. Price has to actually prove to me, okay, they're gonna hold that level. So what I do is I always break down price into ranges, because whatever time frame you're on, you're always in some sort of range, whether that's a yearly range, a 5 minute range, a monthly range. There's always some sort of range you're playing. So this
Uh-huh.
was the range we were in right at the time,
Right.
from this low to this high. Now, as soon as this broke, this is a breakout of a typical head and shoulders. So I wait. So if I'm bullish this market, right, I'm not going to take the short, but I'm going to wait for market to prove to me by moving above the range. Now, once it's moved above the range, then I take action. But
Okay.
to be more aggressive, is another range happening as well on a lower time frame. These are this low to this high. So then I'm going to get rid of this yearly line. We're right at last year's high. But
Uh-huh.
look at this.
Right.
And now focus on the bodies of the candles, okay? Again, I see price action as fractal. So if it's happened before, I look at the same patterns to unfold again. So if we look, we've got small bodied candles, then a breakout here. So imagine how this candle's looking at the time, full on bearish. So I always wait for the daily closes. As soon as it gets back above that, that is a warning sign for me that we're coming off a key yearly level. We've taken out some key stops. I know that a lot of people are short this. I'm not a contrarian trader, but if it's loads of people are saying one way, but my analysis is telling me the other way, I sort of use that in my favor because the herd
Okay.
is wrong
Did it
most of
make
the time.
any difference to you? Because it was something that made me leery of it. That when you have a breakdown, if the market gives you too much time and too many opportunities to react to that breakdown,
Yeah.
that it's just a trap. That,
I mean,
it shouldn't give you, if a breakout's real, it shouldn't give you 10 trading days to make up your mind whether or not to take the trade at the breakdown.
yeah, I agree with that. I mean, sometimes when you say it's too good to be true, it is too good to be true a lot of the time.
Okay.
So, I mean, if you think about this, we've got some people that trade in the breakout from here, then
Yeah.
some people trade in the breakout from there. So the way I see it is, okay, I try to put myself into the mind of both sides of the scenario. Okay, I'll try how are the shorts thinking of this, and then how are the longs thinking of this. And if I'm long, what scenarios do I want out to play? And if I'm wrong on my long scenario, then what would invalidate my idea? And then I have to give in and switch bias. So sometimes I think we get married to a bias too quickly, and then we fail to like, okay, if I'm wrong, what do I do? What's my plan of action if I'm wrong, and how do I take advantage of that? So at this point, when I saw small bodied candles and then I saw this rejection, that's it. For me, that was, so I work in probabilities. So what is the probability of my long idea at this point? It's not really high. It's not really giving me anything. But as soon as this happens, then my probability increases. So I'm always thinking in terms of probability, always in probability, and what would decrease my probability. So if my probability is decreasing, that means I can reduce my risk if I don't want to close the whole position out. Or as soon as this happens and then we get this, then I can increase my risk because my probability is increasing now. Does that make sense?
Yes.
So
Yes.
then what I did was I go down further. So I say, okay, let's bring in some basic SR plays. So we can see this move here. So we can see a stop rate of these lows here, this low there, and this low there. And then we see a push up. Now, I use order blocks as ICT teaches, or a lot of people call it supply and demand. Now, I'm not going to get into a debate of which one's which, but this is what I do. So I look for the down moves that led to the move up. That shows me that the market makers were buying within those candles to push that up. Okay, so this is, and then I refine it by the concepts I've adopted over the years. For example, I use something called the Monday's range. So where I mark up Monday's high and Monday's low, so that's Monday's high and that's Monday's low. And then I look, okay, price has deviated from there. But then if I'm correct, I want price to come above the Monday's low and find support there. So notice what we've done. We've gone from the yearly all the way down to the H1 just for this idea. But my mind is always on the higher time frame. What is going on those levels? Because those higher time frame levels are the levels that's going to give us a big reaction. Even if we're wrong, we're still going to get some sort of reaction out of that. So zooming in all the way down to the H1, I can see that this move below Monday's low, which is this line here, is a deviation from the range. Now, simple breakout where if it breaks out to one side of the range, then goes back within, then logically we should know that it's going to go to the other side of the range, or at least 50% of that range minimum as targets. So then I look for, okay, what are the reasons for it to go up? Well, we've got stops resting there, stops resting there, a clean, inefficient move down. So these moves usually get filled. And then with the higher time frame bias, I can hold it because my higher time frame is telling me higher prices, so possible low in place and then swing positions, or day trade within that higher time frame bias.
Yeah, yeah. Do you take partial profits along the way?
It depends. I mean, yeah. I mean, I do take. I have different accounts. So I have an account where I just hold the swing trade position, and I have accounts where I day trade a lot as well,
okay,
just in case it doesn't go wrong. It goes wrong. So then I look for reasons. Okay, what would be my invalidation level? So I always, at this point, my invalidation level is this, because it goes below here, then I'm wrong. Then as price unfolds and the week unfolds, and here you can see Monday's low is respected, and it starts making higher highs and higher lows, basic technical analysis, then I know where I can tighten my risk. So from my stop loss goes from there to there. That now enables me to lock in profits. Not only that, add another position on. And then as price is unfolding, I'm making higher highs and higher lows. I can keep on reducing my risk and looking to compound positions towards my swing objectives or bias objectives. So
okay,
that's in a nutshell.
Wow.
Through an
I
example.
learned quite a few things listening. Usually I interrupt, but you shut me up, and I learned some things. And you know, I learned, never really thought about it. I know that Steve Ballgy does a lot with candlesticks, but I never thought of it in terms of size of the candlestick.
See, I mean, I don't limit
more or less significance. Go ahead.
I mean, I don't limit myself to any particular time frame. For example, when it comes to like yearly charts, monthly charts, weekly charts, daily, that's different. But you know, sometimes a lot of people trade and they're stuck to a 5-minute chart or a 15-minute chart. Well, that's the limitation you have because of the platform you use. There's no reason why a 7-minute chart could be just as good, or an 8-minute chart or a range chart. It's about what's happening in the bigger picture of things. What is happening? So I mean, if I was to ask you, right, you take this piece of price action, tell me what's happening. You know, you should be able to have a storyline behind it. Well, they pushed the market up, took out one side of the range. So what does that tell you? The shorts, the longs are trapped now, and so if they're trapped, then where would their stops be resting? Below each swing low. So they neutralize the longs.
Yeah, people ask me, Saeed, how do you know where the stops are? And I just, you just went through the exercise. So you look at the market and you go, well, if I was long, where would I put my sell stop? Well, that's where everyone's is, and vice versa. So, okay, that's a great lesson as well.
So it's similar with the euro scenario. So this week we took a long on euro and we were targeting these stops here. Now people seem to forget what's happened previously, and they just want to focus on, oh, there's a level there, there's a level there. But look at, I'm using the whole bigger picture. So if we look at last week, we can see, no, not last week, the week before. Yeah, we can see these highs here. So these lines delineate each day of the week. So Monday, Tuesday, Wednesday, Thursday, Friday. Notice each day of the week, right, the highs weren't tested. So the shorts are having an easy ride. I mean, just trading the stop each day's high. But with the bias as a bullish bias overall, that is beautiful because we can see that how the market's being manipulated, or whatever you want to call it. what they're doing to get how they are moving price to get people confident in their ideas. And you can see that while these are building, this move here, when they take out this stop here and they do this, a lot of people will see this, well, it's a fake out. Well, I'm seeing this as a breaking market structure. Now it's an interest or willingness to take the market higher because we've broken a swing high. So any dips are now buys, and now they're going to be targeting all these stops, gap fill play. Okay, so this week we went long from here, and then different positions here as well, targeting people stops and gap fills or previous week's highs. You know, basic SRs as targets, or even I use fibs as targets as well, projections. In this example, I used the monthly open as a target. Now, monthly opens, weekly opens are usually good price objectives and just key natural SR levels. So here,
More important than weekly and monthly closes? Opens are more important to you?
no, I mean, they're all. I think they're just independent of each other. I mean, the monthly.
Yeah.
I mean, for example, when I'm using the open, that's going to give me more bias for the month.
Okay. So it is. That gives you your bias, the open.
Yeah, yeah,
Okay.
and the closes are okay. Does it confirm that now? Okay, we've had a solid close. There's one thing having a close above it, and there's another thing having a stop rate, and then a close below it. So if close below it, that would switch. Okay, it could be bearish now. If it's a close above it, okay, there's a willingness to continue driving prices higher and staying above it. So it's all about bringing it into context of the bigger picture for me. And this is why, I mean, I don't really trade classical chart patterns a lot. I'll trade them if they're in sync with my overall storyline behind the market. But if it's not, then I'm seeing that as a trap, just like I explained with the Euro USD here. So in this scenario, I'm seeing this as a valid inverse head and shoulders because it's in sync with my higher time frame premise. Low,
Okay.
lower low, higher low.
Right. Got it. So really a great tutorial on monthly, yearly, weekly ranges and how to use them within smaller time frames. Very interesting presentation. Could I ask you for perhaps a couple Nostra Zamans on some projections based upon what you see now in a couple of instruments? For example, a lot of neutrality in US dollar yen. Do you have any views going forward into 2018 on US dollar yen?
Yep, I'm bearish, full on bearish dollar yen. Now I'm gonna do what I do normally, so with my group. So I'll go to a dollar yen chart. So and then we'll give you a better understanding of how I'm going about things. Now dollar yen right now is a bit. 12 months is showing okay, it's bearish for the year. Okay, so it's not telling us much just yet, and we're at the end of the year, so we'll have to wait for the new year to start. 6 month. Okay, so we've taken out the previous 6 month low and we're closing within it. So that's not really a sign I want to look for, but it's not really clear. Let's see what the 3 month is telling me. Now look what the 3 month is saying. Look at the bodies of this small body, small body, small body compared to these larger ranges. So you know there's something big about to happen. Now if I go down to the monthly, and now I can go back to my MT4. Where's my dollar yen? Okay, so this is the range I've been using for the past couple of, since months. Yeah. This low, this to this high. Now, why am I using this range? Why not this range or that range? Well, we've got this low and this high. It's come down, so it's within this leg of the move. Then it's pushed up again. But look, it pushed up, took out the stops there, but then closed back within it. So it's showing me this level is more important than that level there. Again, let's go down. It's taken out this level, but then rejected. So it shows me that this level is key, not this one there. Again, push back up. Not interested in that one, but here. So you know we're still within the range. So we need a clear breakout either way. Then I draw out 50% of the range. Okay, so this is 50% of the range. And you can see how pivotal that is. Now, there's many ways of playing this. You can be an aggressive trader and start, having a few attempts with small risk, or you wait for confirmations. So the way I'm seeing it is, ideally, I would like dollar yen to stay below this high here. Why? Using the same logic, where it took out the stops from one side of the range, we're expecting it to go to the other side of the range. Here, we've taken the stops out, so we're expecting this side of the range to be taken now. And with a bigger overall picture of me being bearish dollar, it lines up with my projection for a lower dollar yen. And I think, well, in the short term, I know it's 500 pips, but while we're within the range, I'm just expecting it to come back to the 108, back down to 50%, and then 108.10s, 108.20s. That's what I'm
Okay,
expecting early next year.
interesting. And you know, you're bullish euro, you're bearish the dollar. Could we see your range on the Dixie?
Yeah, let me bring up my
And
Dixie
then maybe
chart.
wrap it with cable.
Okay, USD. Dixie.
Do you trade it? If you don't trade it, we could go to another one.
I don't trade it, but I use it for what am I expecting for the majors. So if the dollar's going one way, then I'm expecting the majors to go the other against the dollar.
Right. Right.
So if you look here, right, on a 12-month chart for the dollar index, I spoke about shorting dollar index when it was down here.
What an ugly year, huh? Look at that candle.
Yeah.
Ugly.
It's
8
nice.
months down, I believe, out of 12.
Been really down. So if you look, typical pattern here. So if you look at a 3-month, if you look at here, we had this consolidation here. Actually, this consolidation here for ages. We broke out to one side again, came down. Now look, the down move here that led to the move up. If this was bullish, right, then this should have held, but it didn't. Where they were buying previously here, now I'm seeing that as resistance. Now basic support becomes resistance, and
Right.
I am heavily bearish the dollar index, at least till this level here.
What's that,
Now,
88.5?
88.70s, yeah. Call it 89.
Okay. That's
Yeah.
around 218 back. You don't use fibs, do you?
I
You
use
don't need
fibs.
them. You do?
But
Okay.
no, I only use fibs for mainly you know, to draw 50% of a range and for fib extensions for profit taking. Now the same
Okay.
concept I just use for dollar yen. Look at the same. We've got that range and that range here. You can see the importance of that. Now,
Yeah.
if the bulls were going to take this market up, why here? Why have they gone back below the range? And now they're finding resistance at that same range high again. So you can see where I'm wrong is if it goes above this high here. But as long as it stays below this, we are bearish, and I'm expecting much lower prices.
Okay. All right. Anything? Cable follows with your weaker dollar scenario.
Yeah. So with the cable, I'm gonna have to look at the Euro GBP. Now, if I'm bearish dollar, but the Euro GBP is pointing bullish, then I'm gonna be forced to take the Euro instead of the cable. It makes more sense.
Yes. Okay. I agree. I teach that. Okay.
Yeah.
All
So
right.
I mean, but it doesn't mean cable can't go up as well. I am bullish cable, bigger picture.
But why be long the relative weakness is what you're saying.
Yeah, exactly. It just doesn't make sense.
All right. Okay.
But I am bullish cable. We can see we're above the quarterly open. We're in a range right now. We're below the monthly open. So I think next year, if you look at the weekly, just by looking at the weekly, you can tell low, high, higher low, higher highs, higher lows and higher highs in the weekly. And I'm seeing much higher prices in cable. I believe we can take out that high and then probably come to pre-Brexit levels or around 1.4, I reckon.
Okay. I'm going to be greedy and ask you for one more. So that, you know, those were like the Europeans and the yen. How about a commodity currency that you're active in, either Aussie or Canada?
Okay, Aussie. So again, I'll look at Aussie New Zealand, and we've been heavily bullish Aussie New Zealand and Aussie dollar. So if you look at this is acting as my pivot here, resistance. Now if you look carefully, Aussie New Zealand's come down. It's taken out these lows. It's rejected. So same concept again. Expecting higher, so it means I'm expecting higher Aussie prices. Now I think Kiwi's going to rip as well. I just think Aussie's going to be a bigger play. Aussie dollar is I want to show you one thing on the Aussie dollar, which probably will clear a lot of things up, because people keep asking me about what's your Aussie dollar. Now this chart really clears things up for the Aussie. If you look on the quarterly chart, look how long we've been in this range for.
Yeah.
Now this is the first time we've broken out of it. All I'm seeing this is, so if you look on the monthly, probably clearer. Yeah, this is much better. Massive consolidation here. Now consolidation leads to expansion. So this is the first sign for me that the interest for taking the market higher is here. All this I'm seeing as a pullback. We've just retested the down candles that led to the move up, and now look. Now let's pay attention. The corrective move here, and if this was bearish, right, this should have gone down, taken out these lows. But look, we've taken out previous month's low. Where's the next target? Previous month's high, and this looks like it's going to be close a heavily bullish candle, which would confirm my idea of a swing low in place, swing low in place, and I'm expecting higher prices. So I'm expecting 81.17, 81s in the near future for the Aussie dollar.
Okay, what a great interview, Saeed. I'm so
Thank you
glad.
very
I
much.
don't know why I woke up at 5:30, Pacific time, but certainly glad I did. Why don't you take a minute to show your website and talk about your business model a little bit?
Um, I have a lot of YouTube videos.
Yeah,
I do
I
so,
saw your channel. Great channel.
and I have a lot of free content on my website. So free, yeah, a lot of free videos. A few videos here, but my YouTube's got loads. And it's just whatever I've done on my YouTube, I do on my website now. It's just my market analysis and
I'm
what I'm
going to
expecting to
subscribe.
happen. What I expect to happen and what I'm looking for. Just basically how I'm looking at the market and what I'm expecting to happen next. And it's just like that, really. It's nothing major. But
Well, now I understand why so many people were looking forward to this interview. Saeed, really, I'm so glad I reached out to you and that you reached back because you don't even follow me. So I'm glad that
I'll have to follow you now.
I'm glad that you reciprocated and were open to coming to our community and edifying us. I learned a few things from you, and
No, thank you for having me.
I don't even have to wish you a successful 2018 because I know you're going to have one.
Thank you very much.
And really a great interview, and whether you like it or not, you're now my trading warrior brother.
Feelings mutual. Thank you very much.
So great to have you. Everyone that's listening live, you could follow Saeed at Trader1SZ, and I believe that's also the name of your website, right?
TraderZ.com, yeah.
Okay, so I want to wish you a happy holiday season, a happy new year, and not just in financial terms, in all ways, because, money comes and goes, time is gone forever, and really glad that I met you and I learned from you, and it was a great interview and great way for us to wrap up the Christmas week. So thank you for your time today, Saeed.
Thank you very much. It's been a pleasure.
All right, everybody. So that's it. Everyone thanks Saeed for his time. He even gave us some ideas going into next year. And with that being said, I want to wish everyone here Merry Christmas. Enjoy your long weekend, and I hope you and your families have a great Christmas day, and we'll be back Tuesday. For me, my Christmas started in April, joining the ForexAnalytix team. That was my Christmas present, being part of a great team and being able to bring in excellent, well-qualified traders to address and edify our community. And remember, most of all, my friends, don't just count your pips, count your blessings. Merry Christmas, Steve, and Merry Christmas, Stelios, and to the rest of the team. And we'll be back with you Tuesday. Good hunting, and looking forward to getting back together for another slow, snail-paced week next week. And that's it for me. Thank you, everyone. Enjoy your holiday. And this is Dale Pinkert signing off from ForexAnalytix Community Experience. See everyone on Tuesday.